Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. If you need help with anything, check out finding-value.com. That's where I dive deeper into all of these topics. I dive into the individual companies looking for potential individual company investments, and I share my journey with everyone on there. We also have a Discord channel where everyone is talking back and forth, talking about potential companies and what their strategies are for this commodity bull market. We have a coupon code Mayday that is still active, MAYDAY, if you're interested. So let's dive in there. Let's take a look. Let's see what's going on today. We've got the dollar here where I usually start. We've got strong selling pressure to the downside, these two big red daily candlesticks. We are seeing a bounce. That bounce started yesterday with this big wick at the bottom. And today we are heading a little bit higher, 0.27%. To me, this looks pretty weak. It's a weak bounce, so I do think that this is going to extend lower. A lot of the times, what you see is you'll see a pattern, much like we've got going on here. It squeezes to the corner, and right now we've broken to the downside. And what I want to see is sometimes we get false breakouts where we get a false breakout and it reverses higher. Other times we break out, we do kind of a retest and then roll back over and head lower. I'm in the camp that this will be the eventual outcome. That would be my guess. And the way I think about that is I think yields are going to drop, and I think that will be a driver of a weaker dollar. That's my reasoning behind why I think this could go lower. This will help commodities. It will help emerging market equities, but it may not help it immediately. If we get a slowdown in the market, and if the market perceives that there's a slowdown, we could see this kind of come up, roll over. There could be some more, we'll call it fear selling, sell everything, liquidity type stuff, potentially, and I don't know. And then after they cut rates, that's when we could see a bottom somewhere where basically everything gets priced in. 2-year yield, we're up, but again, we've broken to the downside of this trend line, downward. I'm looking and watching the bounce. The bounce doesn't look that strong. The bounce occurred yesterday with the wick on the bottom, the reversal higher. We're seeing what the follow through looks like here. What is my guess? We're going to do this. We're going to get some sort of pattern, and then we'll probably roll back down and over. That is my guess. I've seen this before. I've seen it in other, 2008 great financial crisis, 2020. I just don't buy next to these big red candlesticks. You usually get some movements. Now, if we don't go lower, we could go sideways and consolidate. That's kind of like my best outcome. I don't think we're just going to rip like this. That's my guess. 10-year yield also doing the same thing, very similar to the 2-year yield broken down. And I do think we're getting a little bit of a bounce right now. And I think we'll eventually roll over, where we'll come back over at some point. And then the 30-year yield. And again, guys, it's possible that we do rip. I mean, we'll have to wait and see. And if we get back above, then I will retract my statements there. But right now, that's kind of where my head is at. And there's other information in the market that supports that, like the unemployment rate and some other things. TYX TNX ratio, we are flat today, down 0.14%. We're at a very low level. And when this uninverts, it's good for precious metals and home builders that have lower rates, stuff like that. Last market, when we did it, it started in 2018. We had a little pause here, and then 2020 was the crisis. Could something similar like that be setting up that eventually occurs? I don't know. We'll have to wait and see. TLT bond prices pulling back a little bit because we had higher yields. A lot of the times what occurs is we get a breakout and then a retest, and then we could work our way on up. Yields are just doing the opposite thing as bond prices. 2-year and 10-year, this is the yield curve. The yield curve did uninvert today, and we're right on support. What's important here is when this does uninvert, that means that the curve is coming down. Most of the time, it's the 2 year going down faster than the 10 year. And when it uninverts, most of the time it's because of a slowdown in the market. I'm not saying that that this time we are for surely uninverting. We could stay up here longer. It is possible. But looking at the unemployment rate and some other things, I do think this is going to go lower. That is my final decision. Gold down a little bit today, but I do think that this will work its way on up. We've broken out all to the upside here. It's broken out. We are going higher, 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 and I think that will continue so long that the market conditions that we were just going over in yields exist, which is a uninversion of the yield curve and declining yields overall. Silver's going to do the same thing. It'll just do it a little bit later than gold, which is why we are delayed behind gold. And we could go all the way back down here to $25, $26 an ounce for the retest before moving higher. That is still a possibility. And that's kind of what it looks like at this moment. Platinum up 0.62 or 64%. We're next to a monster red candlestick. Momentum is still lower. Palladium also up today, 3.74%, but we're next to some pretty big down candlesticks. A lot of the times people try to time this and they mistime it and it rolls up and over on them. So what I do is I just wait and I watch it. We've got GDX up 0.82%, same with GDXJ and same with SILJ. They all have the same rough patterns. We have this gap. It's probably going to fill the gap and roll over for a short period of time. It's going to be a kind of the worrying about the economy. So we could come up and then roll back over, and maybe we get a really good buy point in that box over there. XAU to gold ratio, that has not changed. We're up 2%, but the overall picture hasn't changed. It's still an incredible buying opportunity, in my opinion, and we are going to go way up. The reason I think that is we've got the right market conditions. We've got gold that's broken to the upside, and I think gold is going to outperform the consumer price index. So think of gold outperforming inflation, which the margins are the miners. That's what I think. Crude oil, it is up today. We have momentum to the downside. I know we've got deficits. I know we're drawing on inventory. I know we're filling up the SPR. I get it. But if there is a slowdown in the market, this will impact oil as well. It's been very resilient, and I'm curious to see what it does going forward. We could get into the 60s here or even lower if there is a sell everything event and people start getting pressured. It held up very well during those selling pressure events the past few days. But we'll see. TTF gas up a 3.3%, looking pretty good. Momentum's to the upside, looking pretty good. Natural gas in America looks like it's finding support at the support level, and we'll see if we can get any momentum generated to the upside for natural gas in America, Henry Hub. We can also throw a downtrend line there, and it does look like we are starting to get real close to a potential breakout there for natural gas. We got XOP, yeah, you know me. Lots of selling pressure here. These guys coming down, and then the small bounce. I don't buy it. I don't buy stuff that looks like that. We've broken through the uptrend line too. I would be patient here, guys. We could easily come back down with recession worries. I know some people are like, well, I thought you were bullish on oil. I am incredibly bullish on oil. The different time frame. Whenever you see kind of big selling pressure and then you don't break out, and then you start getting all these big red candlesticks, and then you got the yield curve that's starting to uninvert. You've got unemployment rate that's going up. This could get a wash out sale, which means better buying opportunities for everyone who's paying attention. And yes, I'm going to go ultra long whenever this thing does bottom. We've got OIH, also a very similar setup. See this big red candlestick? We've got two of them here. We come on down, come on down. Now, I could be wrong. Fine. But we've broken the uptrend line. That's one thing. And I want to see what this looks like. I'm not in a hurry to jump in this in the short term because of 2 and 10 and the unemployment rate. Those are the two I'm looking at. Coal's following natural gas. It's working its way on up. Sideways to higher is my opinion on coal and nat gas at the moment. And it looks really good. The equities have pulling back, and we're seeing a divergence between the equities and the underlying commodity that they sell, which is good. That's a good time to be looking. Sprott Physical Uranium Trust, we are getting a little bit of a bounce here, but again, I'm being patient here. It all goes back to that unemployment rate, yield curve and inversion, and the 2-year breaking to the downside, and the 10-year. Uranium futures pricing back within the pattern, and this still could head lower depending on the overall outcome here. We've got URA up a little bit today, but again, we've got momentum lower, guys. I don't want to jump in front of this, try to catch this falling knife. Let it base out before doing that. URNM, same case. And then URNJ, same case. Now, I could be wrong, and maybe this does go up, and maybe it goes up a little bit, and we get a pattern that breaks to the downside again. That's where my head is at. The reason my head is there, I understand the fundamental case of uranium. And we are getting a bounce on support. I get it. But right now, you're fighting a bigger macro picture move, and you just don't put up that fight. We've broken the downtrend here. It's heading lower. We've got support here. Yeah, we're up against support. I get it. And I know people are anxious to get back in. But I want to see the yield curve uninvert. I want to see the lowering of interest rates. And I do think this will go lower or stay down. You're in copper. We're back to support. There we are. And we'll see if that support line holds. COPX also falling back. We had a little bit of an update today, but momentum's lower, guys. I think at best we go sideways and consolidate. And I would be careful here. Be careful. We could see further downside. Iron ore, we're back to support, but again, with that yield curve and all that stuff, this is all a derivative of all that stuff. Just be patient. Be patient and watch. Aluminum up 1.9%. It's on support. We'll see if that support level holds. We've got nickel up a teeny bit. And again, I'm not jumping on nickel. I'm not jumping on any of these. Momentum's lower, but sideways is a possibility. We've got Mu up a little bit. We're at support for the most part. And again, we've got some selling pressure. Not much of a bounce. And we're underneath resistance. We very well could go to the lower end here if a slowdown does materialize, and we have a pretty big selling pressure candlestick there on the weekly. Emerging markets up about 0.5%. Momentum still lower. Wouldn't jump in front of it. KRE, momentum lower. Don't jump in front of it. And we've got support right underneath it. TAN up a little bit, but again, it looks pretty weak. Lithium down 0.9%. We're trying to base out. Let it base out. Give it time. We don't need to jump on any of this. That's lithium there. REMX, same thing. Momentum's lower. Give it time. Do not jump in front of that train right now. Baltic Dry Index, trying to find support. This is a real long support. We'll see if it holds. XHB up a little bit. I do think, I mean, we might in the beginning fall with everything, kind of a sell everything event, but I do think when they lower rates, I think this is going to continue higher for the home builders. Russell 2000, we're down, or we're up 1.23%, but momentum is still down. And I would be patient. There's a lot of momentum here. And yes, we are bouncing a little bit today. Not getting in front of it. SPX, we've broken out of this rising wedge to the downside. We very well could come up and then head lower again. That's the retest move. NASDAQ, retest move most likely, and then a rollover is my guess. And then the lowering of rates. That's what we're seeing there. Looks pretty bearish still, in my opinion. SMCI, we are up today, but everything here looks bearish. We've got the end of trend, shoulder, head, shoulder, the breakdown of that, the bull trap, the breakdown of the bull trap, and I do think we're going to head lower. And yes, this is just a weak little bounce here. NVIDIA up 3.8%, but again, momentum is lower. Bearish engulfing, bearish engulfing, bearish engulfing, big red candlesticks all through here. I do think we could potentially head lower. And then Bitcoin, yes, we've got a bounce where we're at, But again, we had a crescendo selling pressure event that happened very quickly. It's like a big impulse move lower here. So I'd like to see what the bounce looks like before making any sort of long call, because we could easily come up and then roll over in some sort of flag pattern or something like that. Ethereum's the same setup. Big selling pressure, right up. We get a little bounce on support, and this very well could break through it. We'll have to monitor it and see. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We still have that May Day coupon code. We have a midweek update coming up tomorrow, and I'll release that probably in the middle of the day, early morning, middle day, and I'll share my opinions on all of this. The macro is driving this, guys. So many people are focusing on the sector. The sector is not weighted as much as the macro big picture view. The macro trumps everything. So when we have these type of slowdowns in the markets, unemployment rate going up, yield curve uninverting, yields dropping like a rock, um, I don't want to jump in front of that. Let it do its thing. It might take some time. These things don't unfold in days or weeks. This might be a 6 to 18 month ordeal. Very well could be. We'll probably get interest rates lower out in the future, probably later this year, potentially, and we'll see how this all unfolds. But when you get these big selling pressure candlesticks, I just don't want to buy next to them. I've been burned so many times in history that I don't mess with that anymore. So I just wait. But that's what I've got for today, guys. We'll catch you next time. This is Finding Value.